Good morning, everyone. This is Rob McDougall from Zhang Financial here with your weekly economic update. Today is Monday, December 1st, 2025. So, as we mentioned last week, we are starting to get economic data in since the government shutdown is now over. However, it's all dated information. We'll hit it, but certainly the economic information itself hardly moved the market. Because it's old. So we had September numbers that were coming out in on Tuesday of last week, the PPI year over year, core PPI year over year. Those numbers came in almost exactly as expected. Actually, core PPI month over month, slightly better than expected. It was expected to be up 0.2%, it was only at 0.1%. So the year over year core PPI also was a little better than expected, came in at 2.6 versus 2.7, but otherwise the numbers were pretty much straight on. Retail sales, though, in retail sales, less auto, both of those were a little less than expected. These were, again, for the month of September. They were expected both to be up 0.4% month over month, and retail sales headline number up 0.2%, retail sales ex-auto up 0.3%. Wednesday last week, we had the durable goods number month over month and the durable goods ex transportation. Those were actually both better than expected, both for the month of September, however, but durable good orders month over month was expected to come in at positive 0.3. It came in 0.5. And ex transportation, it was expected to be at 0.2, but came in at positive 0.6. Now, for something a little more contemporary, we did have the initial jobless claims, and that was for the week ending the 22nd. And that was expected to come in at 225,000. However, that came in much better than expected, a very low number, 216,000. So just reviewing a couple of macroeconomic expectations here, GDP expectation for third quarter. We always use the Atlanta Federal Reserve's estimate. They've been updating it. It hasn't moved much. It's 3.9%, which again would be fantastic after a 3.8% GDP growth in the second quarter. The interesting thing is, as time moves on, the Atlanta Fed really hasn't moved their number the last few weeks, but the consensus the blue chip economic consensus number has continued to move up and is approaching 3% now. So it was considerably below the Atlanta Federal Reserve and now is approaching it as we're getting closer to having that number printed. Inflation expectation, we keep showing this chart. Not only has it been really steady, but actually a nice little downward slope to it in the last couple of months. So inflation expectations, the 10-year break-even, 10-year Treasury minus 10-year tips is a very low 2.23%. Fed funds expectation in terms of a rate cut next month, or this month, December 10th, is the Fed meeting. And the expectation now is there's 87% odds probability built into the futures market. We will get a 25 basis point cut. That's up slightly from a week ago, which was 84%. In terms of returns last week, given the sparse economic data we had, very strong returns last week. S&P 500 up 3.7+% last week, and now year to date is up 17.81%. Across the board, things were very good in terms of the U.S. market. What really stood out, and this hasn't happened that often this year, Russell 2000. Russell 2000 up about 5.6%, leading the way. Also, NASDAQ Composite, not surprisingly, at 4.9%. And we did take a look at the Mag 7 collectively. They were up over 5.5% last week. So S&P 500 up 3.7% last week, growth beating value. By virtue of that, growth being up 4.5%, value up 2.9%. So while the U.S. was up, international was also up, not quite as strong as the S&P 500. Developed markets ex-U.S. up 3.5%, emerging markets up 2.5%. Now, on a year-to-date basis, we just mentioned the S&P 500 is up 17.8%. The developed markets ex-US, that's up 28%, almost flat. And emerging markets up 29.7%. So those look very impressive. It's definitely beat the S&P 500 or U.S. returns. One thing to mention here is that because of the U.S. dollar weakening this year, and year to date it's down about 8.6%, if we take all of the developed markets, ex-U.S. and emerging markets together, and just report their local currency returns, it's still impressive, but it's a little below 22% in total. It's 21.77. So international stocks have certainly done better than the S&P 500, but when you adjust that for U.S. dollar weakness this year, the gap between U.S. and non-U.S. is much smaller. Fixed income last week, another good week. The numbers are just fantastic on a year-to-date basis. Bloomberg U.S. Aggregate Bond Index up about 4.4% last week, so we're up almost 7.5% this week. We had the 2-year down 2 basis points last week, and the 10-year down 5 basis points. So, economic activity that will be reported this week. Today we had ISM manufacturing PMI. I haven't looked at the number, but the expectation was for November, this number would come in at 48.6. Recall the demarcation line between contraction and expansion is 50, so still kind of shrinking on the manufacturing end. The month of October, it was 48.7, so it's expected essentially to be in line. Tomorrow, ISM services. Services has consistently been over 50, but it's come down from the levels of, say, 9-12 months ago, where it was hovering in the 55 to 57 range. Last month, or the month of October, it was at 52.4. It's expecting to weaken just a little more, down to 52.1. On Thursday, jobless claims. This will be watched very closely. Again, last week's number was a very positive surprise, 216,000. Expectations for the prior week, for last week, is 220,000. On Friday, we get a slew of economic data, but this is all late news. So it's normally the PCE, personal income, personal spending, that we get, and usually does move the market, but all of these numbers are going to be for September, so much less impactful. The expectations are the numbers are not going to be dramatically different than what we saw in August. So almost across the board, the numbers, the expectation, consensus, almost the same as the numbers that we saw for August. So there's not much to talk about here. The one thing we will mention is Michigan's consumer sentiment preliminary for December will be coming out. This index has been so weak and really has had no predictive quality to it for some time, but it has been considerably weaker than we've seen. It hit 75 about a year ago, and now last month it was down to 51, month of November. The expectation is it will come in at 52 for the month of December. So that's it. That's a wrap up for our economic update this week. We thank you very much for attending. We'll look forward to seeing you next week. Thank you.